So we've seen sales of publishing portfolios and song catalogs for decades now. I mean, I think back to the Michael Jackson, Beatles, ATV drama that played out over quite a number of years, or even to those Bowie bonds back in the 90s. But this is really starting to gain traction as, I guess, a tangible, even tradable asset class now. Why?
Well, obviously the song is the currency on which the music industry trades, the music business trades, and it's the the soundtrack to people's lives. And we brought songs as an asset class for the first time to the London stock market in 2018. We demonstrated for the great institutional investors there that these great songs that are part of the fabric of society are very predictable and reliable in their income streams. Whether it's Don't Stop Believing by Journey or Sweet Dreams Are Made of This by Eurythmics or, Chic's Good Times, etc. These are songs that become a part of the fabric of our society. And, if you were an 18-year-old girl and you fell in love or had your crush for the first time, to Eurythmics, Sweet Dreams Are Made of This in 1982, which, by the way, is the most streamed song ever released in 1982, then today you're hitting your 50s, you're in your mid 50s, and that song is still a part of the fabric of your life because when times are good, we celebrate to soundtracks of great songs, and equally well when we're experiencing challenges, we take escape and comfort for songs. So the other thing besides the predictability and the reliability is that these songs are uncorrelated. The revenues are uncorrelated to what's taking place in the market. So when you look at our performance during the course of this pandemic, where people have run for comfort and run for escape in these great songs, we listed as a normal listing in the summer of 18. In the summer of 19, we became a premier listing. Exactly a year ago, we became a FTSE 250 company. I think the fastest company to ever become a FTSE 250 company.
Yeah.
And during the course of this pandemic, we've been somewhere between the number 23 and the number 38 biggest yielder on the index.
Yeah.
Because our revenues aren't affected.
Yeah, and I know you say that you're not correlated, but when I hear you also say biggest yielder, I mean, I can't help but think that part of the investor interest in this asset class and in your fund is the fact that we do have a low interest rate environment, and there is this ever hungry quest for yield by investors right now. 100%.
I mean, for me, my main motivation was, net asset value growth, because, we have big drivers where, between 2001 and 2016, we had technological disruption in this space that almost killed off the music industry, through the form of illegal downloading, because people could consume music for free. And only one good thing came out of that, which is that these great songs became available at attractive prices. Now that technology has evolved into streaming, and as streaming has grown from 40 million paid subscribers worldwide when we listed to the 450 million that we've had today, to what are projected to be 2 billion. If you look at JP Morgan's or Goldman Sachs research, you see as many as 2 billion people projected to be paying for global streaming services by the end of the decade. And this is obviously going to drive revenues up. It's going to, bring us consumption from markets that used to be illicit, such as Africa and India. In the last 12 months, the consumption of international repertoire in India has gone from 8% to 42% because people have access.
Shepard Smith here. Thanks for watching CNBC on YouTube.